Let's now talk about the root of the problem of falling equities. The root of the problem is rising US dollar and US yields and the consequent fleeing of investors from our markets to the US. Also, we need to understand why the big private banks are higher today. Among the leading gainers in the Nifty are HDFC Bank and ICICI Bank. Are bankers reading the MPC minutes that came out on Friday to mean that the Reserve Bank will continue to keep the market supplied with plentiful liquidity? Is that a positive take for banks? For all these questions, I am joined by B Prasanna, the head of Global Markets Group at ICICI Bank. Prasanna, good morning and thank you very much for sparing time for us. First, how have you read the MPC minutes? Is there something positive for banks here?
So I think, Latha, the minutes can be classified as a dovish set of minutes, not least because of the fact that there were anyway two external members who dissented and who voted for a rate cut. And if you look at their minutes, it seems to indicate that they will probably vote for a cut in Feb as well. Beyond that, if you look at the persons who actually held the rates amongst the external members, he's also spoken about the need to spur growth and the fact that it was a very close call. So it looks like the third external member is also looking very close to flip around to maybe a rate cut in February. The interesting thing is what's going to happen to the RBI members. And even amongst the RBI members, at least as far as the policies, the previous minutes are concerned, you had one member really talking about the need to cut rates on you need to pivot at the right time and you need to cut rates as we go ahead if inflation comes down. Actually, both the governor and the deputy governor are not going to be there. The ex-governor and the deputy governor are not going to be there for the next time around. So it's a big call as to what they are going to be, the new members are going to be saying. So net, I would say that the minutes was dovish, but a lot of what is happening in the market today, Latha, is actually happened post the policies, actually happened over the Fed meeting, over what's happened over the last week. Maybe we can discuss about that.
Okay. Yeah, of course. I don't think the new governor will want to take on a situation where all the three external members are voting against what the Reserve Bank is saying and he has to use a casting vote. I don't think he will want that to be his maiden shot. In any case, before I come to the events, the inflation number that came in a little more benign than the market expected in the United States. A word on how do you see liquidity in the Indian market? I mean, like I said, HDFC Bank, ICICI Bank are all higher today. In fact, bank index is the best performing index at 1.2% higher compared to any other sector. Are you all sensing that liquidity will be plentiful? Because the rate cut is actually banked negative in the initial stages. So what are you drawing positive?
So, Latha, I will not comment about the stock prices and its impact and what happens to ICICI Bank stock price. I'll stay away from that. But from a system perspective, I think liquidity is not looking too good, Latha, frankly. I think the CRR cut, while infusing liquidity, kind of was only offsetting the kind of liquidity tightness that have happened over the last 2 months or so. In fact, in the last 2 months, you have seen core liquidity drop from around 4 lakh crores to something around 65,000 crores as we speak. And this is due to a combination of FPI outflows, more than 2.5 lakh crores. Then there is a redemption of government bonds, and then there is CIC leakage. So the reduction in liquidity, core liquidity has already happened, and RBI is partially offsetting it by inflows of liquidity, CRR cut. Going forward also, unfortunately, the currency leakage is only going to increase in Q4 because that's a time when typically around 1.25 to 1.5 lakh crores of cash goes out of the system. So from that perspective, and even if you assume FPI flows is not an outflow, and even if they remain neutral, it basically means that the core liquidity will be down to something like a flat number to around zero. By end of March, even after you take into account the CRR cut that has been infused. So net, I think the RBI has started a process of liquidity infusion, and we feel that if the FPI outflow or even if inflows do not happen, then we are pretty sure that we are going to see more liquidity action from the Reserve Bank. I think the key question is what kind of actions are they going to take?
That was going to be my next question.
Yeah, so I think for short-term frictional liquidity issues, primarily led by government balances and government spending and all that, I think they'll be using VRRs and maybe VRRR sometimes to suck out and VRRs to infuse. But from a more fundamental perspective, I think core liquidity can be done only through expansion of RBI's balance sheet. So I think it'll be a combination of We feel it will be a combination of open market purchases primarily. Also bear in mind that in this year, if you see, RBI's balance sheet on the domestic side has also come down by around 90,000 crores, which is the bonds which are held by the Reserve Bank, which matured in its balance sheet. So even from a justification perspective, whether they should be doing it or not, I think RBI will not have a problem in doing an RBI open market operation, at least to the extent of 90,000 crores. They're just giving back what they took out in this year. And also bear in mind that they have actually changed their stance from a withdrawal of accommodation to at least a neutral accommodation, neutral stance last policy, which basically means that infusing liquidity is not against their stated stance. So either which way you look at it, liquidity is getting tighter, RBI stance has changed, and RBI has withdrawn liquidity from the bond market in the the first 6 months of this year. It looks like open market operations will come in, but I'm sure RBI will have to think it through and will take some little bit of time to, democratize it within the system and then try and, start the operations.
Now, I take your point. One of their biggest problems, as I understand from sources, is that, already the difference between the repo rate and the 10-year is barely 25, 26 basis points. So if you go and buy the 10-year, you're reducing that space even more. That's also a concern. But anyway, I want to get to the rupee and the currency. That small PCE inflation number coming a little lower than what the market expected, though higher than October. November inflation is higher than October, but lower than market expectation in the US. Does it mean that we are 108 is a topish? What are your thoughts on dollar index and rupee?
So I think, Latha, if you really look at the last 2 months, dollar index has gone from 100.5 around about to 108. So you can say that it's kind of, played out a really long trade and it's kind of getting into topish territory. But more than taking a call on levels, I think we would need to take a call on what are the events which are getting lined up and what is the direction. If you really see, two things which has happened in the last 2 months is one is, of course, the Trump trade, which came in before he got elected, then the Trump election, which happened, leading to a lot of dollar strength. And then you see very recently the fact that the Fed has actually kind of reflipped around to I wouldn't say a tightening stance, but a more hawkish stance. What you got last week was a very hawkish cut. And while the market was never believing in the first place that the Fed will go and cut for 425 basis points next year, they were more willing to believe it will be between 2 and 3. The Fed went the other way and actually cut down the number of rate cuts from 4 to 2, which I thought was a little bit more than what market expected. And now the market has actually gone the other way by actually expecting only 1.5 cuts next entire calendar year. So I would actually say that this trade of the Trump trade, as we call it, which is a strong dollar, strong US equity, higher bond yields, and weak emerging market currencies, this has been playing out. It is close to some kind of a reversal, but at what level it will reverse, we don't know. And the fact that in January, we still have the actual presidency happening. We also don't know to what extent the president is going to use all these tactics as a transactional kind of a negotiating tool, and what extent does he really do a 60% tariff on Chinese imports, in which case the yuan will have to depreciate much more. So these are the things which we need to watch out for. So I am wary of taking a level-based call and saying that, okay, it has appreciated too much, so the dollar will have to go back. I would much rather look for signals in terms of what's going to happen from the presidency side. But we also have a view that I think the Fed has gone much more hawkish than what is possibly going to transpire next year. We do feel that they might be able to cut 2 to 3 cuts of 50 to 75 basis points next year. So at some level, this trade would have played out and the reversal will happen. At what time and which level, we wouldn't know.
But nevertheless, I'm going to ask you levels. One that, from an investor point of view, if I hold on to dollars, the dollar is buying more, their stocks are rising, and they're giving me very good yields. It is exactly the opposite when you're holding an emerging market currency. Their stocks are falling, and the currency itself will buy less. It's weakening. Now, therefore, does this curb how much the Reserve Bank can cut? Will it be a very shallow cutting cycle? What is your timetable and number of cuts from the Reserve Bank as of now? And what's your year-end rupee forecast for 2025? 2% lower, 1.5%, something? So
Latha, I think first of all, I think what RBI rate cuts or lack of a cut does to the US dollar territory globally, it doesn't do anything at all. So that's the first point. But coming from an INR perspective and from the central bank policy perspective, since the fact is that dollar return is the maximum for international investors, and the only game in town in the last 2 months has been holding dollars. And if you look at a longer term return perspective also, US dollar return has outbeaten every other currency return. And why would people internationally hold on to an emerging market asset if they are not getting a risk adjusted return for that? So that's the core of the problem. And the problem is leading to a lot of outflow. So in this kind of a scenario, frankly, I would say that the RBI normally wouldn't be thinking in terms of cutting rates. They should actually be thinking in terms of keeping the rates on hold. But then we also know that RBI looks at domestic factors more for policy making. So if they do feel that going forward growth, there is going to be a downward estimate of their growth projection, and if they feel that the inflation number for December comes a little lower than what they have assumed in their trajectory, they can always make a case for expected inflation coming to 4% and hence, go and cut. So I think that's where we are on the rate cutting cycle. So February is live, but I would say that odds of a Feb cut is reduced. So in between Feb and April, we'll probably get a cut if inflation behaves itself. Now, I think, and so your question, Latha?
Number of cuts and rupee range.
Yeah, so I think we think it's a 50 basis point shallow rate cut cycle, which is 25 basis point rate cuts. And the rupee range is we have to prepare ourselves for a depreciating rupee. We do think that it's going to go to around 85.5 by end of this financial year and possibly towards 86 or 86.5 towards December. And of course, there will be periods when the dollar will reverse its strength globally because it has moved a lot, and then you would see a lot of bullishness in emerging markets. But at that time, RBI will be intervening to protect the rupee from appreciating much because they have to recoup all the reserves that they have lost. So the view is appreciation limited because RBI will be there, and depreciation, they have to let it go as yuan and other currencies depreciate.
Fair point. Thank you very much. You've given us some markers in the sand. Thank you very much indeed. And if we don't meet you on air, have a great 2025. Well, the market is having a good, first day of the last week of 2024. The Asian indexes, topics, KOSPI, all up between 0.7 and 1.7 for the KOSPI. Indian markets, shoulder to shoulder, 0.7 higher on the Nifty and 1.2, 1.3 higher on the Bank Nifty. We are shoulder to shoulder in terms of gains. Fingers crossed on whether the recovery will keep the pace. Up on Bazaar, Chart Pastas.